Please, please, after you have registered as a member or registered as a partner, please go through the website and see actively if you can break anything or if there's any issues that you pick up, and please let us know. Over the next couple of weeks, we will definitely be doing some fine tuning on the website and seeing what works like and whatnot. So your feedback will be highly appreciated. So I think just quickly confirm again, Katrina, you guys are seeing my screen?
Yeah, thank you, Christo.
Perfect.
Okay. It's perfect.
Thank you. Okay, so this is the homepage of our lovely website. It's quite standard with a normal overview of whatever is happening on the main tab that we'll do now. And here's a quick summary of some Knowledge Hub items. So if you're on the homepage, click on one of these items, it will directly take you to Knowledge Hub. There we have some upcoming events that you can also add to the website. This takes you again to the and then of course,
Christo, your sound is breaking off. Do you? Oh. No, okay, it's not. I can also see it's June and Chris. I know, guy, today we have quite a big problem with the network in South Africa. So it's not Christo's connection. It's unfortunately the entire country, but maybe try with headphones. Apologies about that.
Thanks a lot for mentioning that, Katerina. Is this a bit better?
Much better.
Yes.
Ah, perfect. Thank you. Apologies for that, everyone. So as I said, is there anything I should repeat, Katerina, or was the gist of it coming?
Maybe you started with the landing page, and that's fine.
Okay. Perfect. Okay, so here is our homepage. As you guys can see, it's just a standard summary of the rest of the website. There's some highlights of Knowledge Hub items that we will get to in a moment, and some highlights of events that we will also get to. And then here, of course, is a link to becoming a member that we'll also see later, and just a little carousel of the current partners that will definitely be increasing in the coming weeks. On the About page, also quite standard, you'll see the missions and vision statements and the story of how CSA came about, identity, vision, mission, and this is quite a crucial part of the whole CSA vision is these 3 strategic pillars, and this website is actually a tool to facilitate the implementation of these 3 strategic pillars. As you can see, it's knowledge sharing and capacitation that comes back to the Knowledge Hub, and then partners and collaboration, and facilitating the transition, which includes all the relevant topics at the top. Further, it is also quite standard. And then you'll see also links to becoming a member and becoming a partner. And this is where the exciting things start. So the Knowledge Hub is quite unique on the website, where if you are a member and if you are registered as a member, you can upload knowledge items to the website. So any relevant resources, for example, articles or reports or any tools, or even like we will chat later with Fatola, if there's any funding opportunities or financing opportunities, all of those can be uploaded here. And here are just a few examples that has already been uploaded so far. So when you click on these resources, it will take you to more details and to any relevant links that might be required. And then next is just a page for our partners. So this is when you register as a partner on the CSA platform. This is where your profile will be highlighted. And when you click on a partner profile, you will get some more details and again, any relevant links to that specific partner. And then members. So this is another exciting part of the website. As soon as you are registered as a member, you can see all other members. So because I'm not currently logged in, I can't see the other members. So when you register as a member, all the other members will pop up here and facilitate the connection and collaboration between all the other members. We have our events, and this is another unique part of the website that members can actually submit any events. So here are a few events that has been submitted by members so far. So any relevant events that you might know about or are having yourself, you can promote it on this website and upload it here. And then the other exciting part is the account part. Then this is where you will actually register. So once you have registered, you will see on the account page, you will see your profile where you can edit your all the relevant information about yourself and the information that will be shared on the members page. This is also where you can publish a document. So if you have registered and you are a member and you want to publish any resource, this is where you will do it. All the relevant information can be filled in here. And as soon as you submit this resource, it'll be sent for review by the CSA team. So this is also how we do some quality control to make sure that all the information on the website is relevant and of high quality. And similarly, you can publish events. So any relevant event, you can send the CSA team. Again, it will be reviewed and published on the website. And a nice feature is any resources or events that you publish yourself will be stored here in your library in case you want to edit or change, or just as a reminder of what you have submitted. And that is our website. Maybe just a last, while I'm seeing the partner registration here, maybe an important note is if you want to register as a member as well as a partner, you will need to use 2 different email addresses, because for the partners, we prefer that it is a dedicated company email address that stays with that partner. Because like we know, the people move around between companies. So if an individual registers a partner profile and that individual might leave that company, then the profile will be, it'll be outdated, and there will be issues logging into that partner's profile. So in an ideal case, we'll have a standard company email address connected to the partner profile. And for a member profile, you can use your individual personal email address. And that's it. Thank you for your time, everyone. If there's any questions, I think we might be able to, maybe we'll take the questions at the end. Otherwise, I'll hand back to
Thanks a lot.
Gracia.
Thanks a lot, Christo. Feel free to go on the website at the moment if you've got any question. The team is available. This is a significant milestone for the team that's been working on it, and congratulations again. We enter the next phase of our webinar with a presentation from Petola. So the first speaker is Grant Prince, who's been a household name, I think, in supporting social entrepreneurs across the clean industry in South Africa. So I'll hand over to Grant. He'll speak to us about some of the experiences and lessons learned from trying to secure financing to circular financing specifically for entrepreneurs available in South Africa. Over to you, Grant.
Cool. Thank you so very much, Gracia, and good afternoon, everybody. It's really wonderful to be with you this afternoon. I hope that you are all well. As you can see, working with green SMEs and circular SMEs and finance, you tend to lose your hair over time. So that picture felt like it was eons ago. But nonetheless, thank you very much. Honored to be in your company this afternoon. Sebasang, if you wouldn't mind sharing the presentation, please. Awesome. So the team at CSA asked us, in fact, to just speak a little bit about, what we've been seeing in the green and circular finance space, and the perspective that we would love to share with you this afternoon is really from the bottom up, right? So the entrepreneur's perspective and our lived experience in helping green and circular businesses get money, to develop, grow and scale their businesses. And, you know, some of the initiatives that we're trying to do in-house to really promote the advancement of this area in South Africa. I think, you know, really appreciative of the initiative driven by ASEN and CSA to kind of bring us all together. I think up until now, we've kind of been operating in our little silos. But I think the promise that this platform and the website presents us is to come a little bit closer to each other. And I think you'll find that we're trying to solve the same things. Maybe there's different approaches that we're taking, but we're heading towards the same goals, which is quite exciting for me. So really well done to the team on that. And definitely looking forward to contributing in whichever way we can as well. Cool. Thanks, Ibu-san. So just on what we're going to speak about very briefly, next slide, please. Again, just a reminder of, you know, what the problem is. Is access to finance really a challenge? There's so much money in the ecosystem, and why is it not making its way to small businesses? You know, why are small businesses not growing at the rate that we hope they would? There were all these promises made in these grand policy documents, but none of them have really delivered. And then we also, in thinking about this, we also reflected a little bit on the global investment context. So is there enough money flowing into green and circular opportunities? Is there really an appetite to seriously see this as an investment opportunity long-term? Or is it just a fad? Is it just kind of popular to say that, you know, you also have a sustainability or a green and circular mandate? So a reflection on that, and then going into what we're trying to do about it. Thanks very much, Benji. Next slide, please. Okay, so we all know that access to finance is a problem in South Africa. There's a lot of money in the ecosystem searching for a home. So the lack of capital is not actually the issue. It's a combination of things, right? So we like to say that there are challenges on the supply side, yes, but there are also challenges on the demand side. Our financial sector is, you know, quite matured. Our banks are notorious for being risk averse and very safe havens for kind of stewards of your money. But that also makes them, you know, they're also constrained by a lot of regulation, which doesn't quite make it easy for them to provide financing to early stage businesses in particular. So there's a lot of businesses, and there's this growing missing middle that people often speak of, that struggle to get the financing that they need to make it to that next level of growth. So along came the fintechs, and they kind of revolutionized the way you screen financing applications, but they are still kind of expensive, right? So they can give you money within 24 to 48 hours, but you pay a risk premium. And most of it is related to the lack of information, or, you know, the time that they don't have to kind of do proper vetting and check. So you pay a bit of a cost on top of the normal cost of financing. And that often makes it difficult for SMEs to finance the opportunities that way, because their margins often don't cover the cost of financing. Then on the demand side, you know, information asymmetries, and we've seen on our own impact fund projects, the deal readiness of businesses, particularly, you know, given the profile of your entrepreneur segment, is so varied. So you'll find that people that are from rural or peri-urban areas have a tougher time making it through the due diligence processes than people that are from kind of, you know, well-educated or corporate backgrounds. So there's a bit of inequality there that we need to address through the design of how we do financing. So the financial exclusion is a challenge for majority of small businesses, not just on the kind of running my business transaction side, but also on the access to capital to really kind of seize growth opportunities that are presented to me. On the funding gap, we did find that it is significant. And given that Fetola works in kind of with your base of the economy, bread and butter businesses across South Africa, we found that the funding gap is more significant on the lower ticket sizes, so less than $1 million, whereas your financing landscape is really set up, and where they make their returns are often on the bigger ticket sizes. So there's a mismatch of preferences there as well. Awesome. Next slide, please, Benji. So that's a known challenge for SMEs and small businesses in general. For green and circular businesses, it's even more difficult. So we know that, I mean, we would argue that, you know, for green and circular SMEs, it probably takes a bit longer. And usually finance and investment houses don't kind of treat them as green and circular businesses off the bat. So they normally look at product or service markets and try and lump them into different industry or sector verticals. The reason why green and circular financing is a challenge or more difficult is that green economy is quite young. It's a nascent sector. The business models are new and have a high level of innovation risk, right? So the product and service concepts are quite new, or the adoption rates are not as high yet. Green businesses do tend to start small, but they do have, you know, the opportunity to scale quite rapidly, and oftentimes on the back of large contracts or orders or commitments from customers. But they don't have the balance sheet. So the businesses are started with the entrepreneur, the shirt on his back or her back, you know, and an idea. And then it takes them 7 to 10 years to get the business going. So that is a challenge, and also presents an opportunity for financiers and investors who have a longer term kind of risk appetite. In the current environment, you know, there's a preference to get short-term results, and that does drive some of the decision-making, especially given the fact that there's a limited kind of reference point, right? So we haven't done enough deals within green and circular businesses to kind of give us a proper sense of what the risk is. And so I think that's an opportunity again, waiting to be realized, which I think over time, and certainly the data that we've been seeing, there's definitely a change towards the positive. Next slide, please, Sima-san. So where's the money, right? And is there money coming into the green and circular economy in South Africa, or in Africa, for that fact? And the data that we've been looking at says, well, over the last 10 years or so, it's really been negligible, right? A lot of the capital is flowing into more developed markets, or where the populations are bigger, or where they're a bit more advanced in their thinking and the adoption of kind of green and circular technologies. And you can see there, as of 2021, there's a tiny little speck or embryo that's emerging on the African continent. So the interest is definitely picking up, but there's a lot more opportunity on the African continent that hasn't been tapped properly yet. But I think the trend is definitely positive, which led us to kind of looking at the local environment. And I think there also is quite a positive shift in investor appetite, but it's largely driven by your kind of public sector, TFI, constituency. Next slide, please, Benjamin. Yes, and so on the local front, financing for green and circular business models, as mentioned, is largely driven by local investors. Your commercial funders and investors, like your banks and your non-bank financial institutions, do have a mandate. There's a lot of policy that's been written to incentivize commercial funders to finance green and circular businesses, and the momentum is definitely picking up. I think there is a realization that, to do what's good for the planet is ultimately good for business, and that's driving some of the momentum towards financing these products. So out of the 490 plus financing products that we have in the country, around 130 plus, and I mean, this is, just looking at, Green Cape and consolidating different databases that we've collected over the years. And about 26% out of all the funding products in the country are targeting SMEs that have green or circular business models. And you can see the spread is driven by your DFIs and your commercial sector, as mentioned. On the kind of private equity, private debt front, there is a pickup in the kind of mandates that are shifting towards green and circular. But again, the risk appetite is to get quick wins or quick runs on the board. And then, where green and circular investments tend to be of a more longer term nature, depending on kind of which sector, if you wanted to group them into sectors they come from. In terms of the type of financing, I would love to show you a picture of where there was more grant funding. But you can see the early stage grants, maybe there's an opportunity to kind of put more money into that area. The rest is spread between debt and equity, which kind of makes sense, right? Because it really depends on the source capital. Blended finance is an attractive area that's growing, and I think holds a lot of promise for the way we finance green and circular business models. And it's an area that we try to tap into quite strongly in terms of how, our homegrown funds are capitalized and how we try and encourage our stakeholders to apply the commitments in kind of, innovative ways. So yeah, blended finance, I think, there's a great appetite for that because, people kind of want to be on it together, and nobody wants their head to be the only one that's on the block. So yeah, overall, encouraging signs, but a lot more that can be done. Definitely on the local front, I would say there's signs of vitality, but more advocacy, to bring capital closer to innovators, entrepreneurs, business owners that need it the most. Awesome. Thank you so much, guys. Happy to take any questions at the end. Thank you, Sebasang. Over to you.
Thank you so much, Grant. As Grant said, my name is Sebasang Likuleni. I am an investment analyst at Vetola, and I've been working in and around circular economy accelerators. And I've acquainted myself with the problems that the seed and early stage businesses face therein, and we have been working towards finding solutions here at Vetola. So what I'm about to do is just take us through our green and circular impact funds. And our Grant mentioned a few points, like few key points, and one of them was that there were low capital allocations for green and circular economy type businesses. And so as a response, we have, with our partners, devised concessional finance instruments in the form of grants and loans that will help these businesses move up the financing spectrum. And so when I speak about a financing spectrum, I'm speaking about moving a business from family, friends, and fools money, which is limited, as you know, from that to grant financing, from grant financing to concessional loans, from concessional loans to commercial capital. So at every stage of the business, there should be an avenue for them to approach that would allow them to fuel their growth for the next stage. And what we have found, as Grant alluded to earlier on, is that there are financing gaps. And so these instruments that you see before you are meant to plug those gaps. So I'm going to start with the Green Economy Fund, which is a 10 million Rand fund. It is done within the Fetola and Nedbank ESD network, which means that entrepreneurs who have either been on a circular economy accelerator of either of the two partners are eligible to apply to the fund. These businesses would have received business development support over a sufficient program period that would have enabled them to put some key systems in place, operationalize their business, grow their business, and to some extent de-risk them. And so when we look at the global criteria as to what we'd be looking for as a standpoint is, one, these businesses would have been trading for more than 6 months. They would be doing less than 500,000 in annual revenue. So you can see that this kind of fund is targeted towards businesses that are very early stage, seed stage, very early on in their business journey. And what they would have before them is a compelling market opportunity and growth plan in which the impact of the proposed application that they would put forward would result in a impact within the short to the medium term. So the funding ranges for this fund, as you see, would be between 50,000 Rand and 250,000 Rand. For requests that'll be above that 250,000 Rand threshold, there would be a need to be a very strong and compelling case that would warrant the investment team to invest in that kind of opportunity. So this is targeted towards very early stage type businesses that need to capitalize their business to move along the financing spectrum. On the right side of the screen, you can see that there's a Fetola SME fund. So the Green Economy Fund is grant financing, and the SME fund, which would be low interest loan funds for working capital requirements into businesses that have either been on a green or circular economy programs. And one of the kickers here is it's impact first and it's concessional finance. As you can see, our instruments are ranging between interest rates of 7% and 12%. And we recently did a study as early as 3 months ago, looking into what are the kinds of instruments that are available to businesses looking for working capital finance. And what we found in the South African industry is that there are a plethora of players who are offering working capital loans at exorbitant interest rates, some as high as 30%. And so for really small businesses that are trying to grow, those rates are prohibitive of that said growth. It is a blended structure within that fund. So you have your grant financing as well as the loan financing into the fund. And there's a first loss basis applied there. For the criteria of types of businesses that would be eligible for those funds are those that have been typically trading for more than 2 years and are doing more than 500,000 Rand in annual revenue. And they are at a point where they have full compliance and financial records. Their funding ranges would be between 250,000 Rand and 1 million Rand. And this speaks to the financing gap. And this is where a majority of the SMEs that we've surveyed are in need of financing. This is the applicable ticket size. So within the Green Economy Fund, as I've said, it's open to businesses that have been on our circular economy programs or our Nedbank ESD partners. And as you can see there, our strategy when we assist businesses is that we not only provide them financing and we not only provide them with business development support, but we use the both of them in conjunction. And as you can see that there are different advantages, different outcomes if one is applied without the other. And as you know, this is intended to de-risk the business so that by the time it needs funding, which would be the last intervention, it has a minimized chance of failure with attracting capital. You know, if I were to personify capital, I would say that capital is a cowardly person. It only goes to places where it can expect a return at an acceptable risk. So we have a process in place that would make sure that by the time these businesses are looking for finance, they are already de-risked. So as you can see, the process, we apply business technical skills, we give them a network and our partners to them. We have a growth strategy, we put in systems and processes. And the last link would be investment readiness, which deals with issues in the demand side. So the business itself, plugging in the holes, and also the supply side, we've developed instruments that are able to target their needs. So as earlier, I was speaking about the financing spectrum, and you can see here on to the right of the screen, we are essentially intending to build a bridge for businesses with high investment potential, with the role of fast tracking entry into the formal financial system. So plugging in that gap where they have not built insufficient track record for them to qualify for commercial banks and private equity, but we're putting instructions in place to make a railway, if you will, that will eventually lead them towards getting that. It can be also said that not all of the businesses are going to actually get there, but we can certainly help them move along and build some form of financial resilience as well as business resilience in doing so, by connecting them with capital that can meet the opportunities that they are looking for. So just a recap on what we'd be looking for in the Fatola SME Fund. We can see that, you know, it could be a purchase order that the entrepreneur has a contract, a tender, a letter of intent, and as you can see, those are the other criteria that we have listed there that I've already covered. So this is what generally investment teams will look for, and this is what we, in anticipation of putting a entrepreneur's business before an investment team would work on. And so, you know, the basics are that there are proper legal and tax compliance in place. That would be, you know, you have your proper entity is in legal order. The annual returns are filed. They are tax compliant, and also that they have adequate financial record keeping, in which most investment teams look in helping them make an informed decision about where the business is at with their finances, and would they be able to handle the additional finance, whether that be debt, and would they be able to make the best use of finance, which is a scope most scrutinized when giving out grants. The third one is a management team is formed. Not all businesses will have management team, especially those that are seed and early stage, but at least the investment team would like to know is what is the supportive structure around the entrepreneur who's leading the business, so that there is adequate distribution of responsibility, and that the business is not a one-man or one-woman show. What investment teams will look for there is there a key man risk? So if anything happens to the owner of the business, does the business fall flat? Another one is the key customers or the agreements in place. Again, this will depend with the kind of maturity of the business. smaller stage or seed stage businesses would not necessarily have, key customer agreements in place, but when applying for funds, what would be looked at is what would the funds unlock, and would it be able to put them in a place where they can attract those customer contracts, either by way of capacity or perhaps by certification. The other thing that we'd look for is the revenue growing faster than expenses? And to know that, you have to sort out bullet point number 2, right? There have to be adequate financial records in place. So all this speaks to one another. I've already spoken about the revenue being greater than 500,000 Rand, especially for when we're talking about concessional finance in terms of instruments that are used as loans, and also more than a 5% net profit margin on opportunity. So this is just a way to track how profitable your business is doing. Is it sustainable? Less than that amount gives opportunity for worry, because there's not significant margin of error. If anything happens operationally within the business, that will likely cause a loss. What we also see is the leverage ratio. Just so that would be how have you capitalized your business using debt. So generally, we do not want high debt on the balance sheet of a business, because especially if the business is applying for further debt, it raises questions around serviceability of the loan and the credit risk that is attached. At the end of the day, impact investors are essentially trying to put the business on a growth path, and not to encumber or be an obstacle to the business. So these are some of the things that globally investment teams will look for together to paint a picture as to whether a business is adequately ready for the level of financing that they required. If not, we as Fetola definitely look at all of these facets and see where can we plug it, and how can we provide support, so that the next time an opportunity arises for financing, there's a better outcome in the results. I thank you for your time and listening to what we have discussed about financing in the green and circular economy space, particularly in Africa. If you do have any questions, Grant and I will be taking them, as well as if you have any questions regarding the CSA website.
Thank you very, very much, Grant and Sibusang. I think that this was super insightful. We've all had experiences, either we are entrepreneurs ourselves or we've worked with programs that support entrepreneurs. So putting this into numbers has been super insightful. There's a couple of questions directed at Fetola in the chat room. So I will just start with those, unless there's any comments coming from Katerina Christo.
All good from my side. Thanks, Gracia.
All good. Thanks, Gracia.
Perfect. The first question is actually from Katerina and directed at Grant. So in your opinion, what would it require for South Africa finance institution to fund more green economy or circular businesses?
Can I say a miracle? Because there are so many guarantees and things thrown at them. I think, yeah, something close to a miracle, because even amidst COVID, with all the guarantees, there've been such a low deployment rate of capital into SMEs. I think we need to sort out well, you need to address both the supply side and the demand side, right? There is an opportunity to look at policy, to look at the incentive structures within the operations of these finance institutions, so how they actually work and what drives deal flow. But then also to look at kind of, incentives and policy that sorts out their, what would you say, commercial interest. So, lower tax rates. I think 12J was an initiative that, held a lot of promise, but the implementation was a bit flat. And then on the demand side, so all of them that we work with, that come to us, it's pipeline, right? They're looking for investable pipeline. They're looking to deploy funds, at a low level of risk with almost a guarantee. So I think a combination of supply side interventions, demand side interventions, and then some kind of a soft landing from government in the form of guarantees. So it's not that these solutions are not, they are all there. It's how we bring them together that might drive some of the outcomes. But again, I think, the opportunities for small businesses, they're not moving fast enough up the maturity kind of cycle, if you know what I mean. So you have a large base of small SMEs in kind of the emerging segment, and they're not moving up quickly enough into maturity to be attractive to the financial institutions. I hope that makes sense.
Yeah, super interesting. Thank you.
Thanks, Grant. The next question is also directed at you. I think it's from, let me just make sure that I've got the right question here. It's if one overlays Africa's lack of green finance versus global trend against global growth figures. So currently on the growth spectrum, Africa is leading. This shows that there's kind of a huge opportunity. What would be your thoughts on why green funding is currently lacking on the continent?
Yeah, that's another good question. And I suppose it's related to trust, right? And probably structural issues within local economy. So for example, you can get a whack of money from the EU into a local African market. How is that money managed within that local environment? And I think, there've been too many cases of like corruption, and so all of that gives you kind of a bad rep. I think we still grey listed, right? So the due diligence that you have to go through if you're getting money from the US is like, they bring BMI machines and all those things. So yeah, I think we need to build a little bit more confidence and trust in kind of foreign investors. They do want to come. They recognize the opportunity for sure. But it's those issues of, okay, if I put my money in, am I going to get it back? There's issues with, like, I can't send my team over because there's all these visa problems and blah, blah, blah. So there's the kind of regulatory systems and environment doesn't encourage a lot of, that trust element. How, Bridget, that was, again, this is the feedback I'm getting from offshore guys wanting to participate. So the appetite is there, but it's kind of like, okay, if you can sort this out, then we'll come in.
Okay, perfect. Before we move on to the next question, Chris, I just want to note your question. So maybe I've got a question for Sibusang. Very, very interesting stats that you've shared, and the fact that Fetola was able to put together an instrument that responds to the needs of entrepreneurs, right? Which is, most people, at least 44% of small-scale businesses are looking for 250,000 below. What I haven't seen, and apologies if I missed that, was how does that spread across let's say the green economy sector? Like, who have been the entrepreneurs that have been successfully gone through, let's say, your financing instrument, and what kind of key trends and lessons are you drawing from that?
Shall I go, Benji, or did you want to go first?
You can go first. I'll double up.
Okay. So if we look at the 12 months, maybe 2 years, it's really been matured businesses. So I don't think we've ever funded in green and circular economy that got significant amount of funding. I don't think there's been a business that's been younger than 4 years old that doesn't have a kind of track record of trading for less than 4 years. I think if you look at the profile of the entrepreneur, again, it's well educated or from a corporate background. So often it's both. Or it's a young guy, out of school, and he's kind of hustled his way into commercial finance via competitions, grants, eventually building capacity in the business, building up assets, and then getting to commercial finance or to impact funding. I think there's been 1 or 2 unicorns, but it's probably taken them 5 to 6 years to get there. So, and again, they've had lots of support from their personal support network. You know what I mean? So it's like, if you don't have a strong support system, if you're not from a well-educated or from a kind of, educated background, or from some kind of where you have networks in those environments, it's a lot more difficult for you to get the kind of investment or financing that you need to really kind of achieve significant growth. Again, on the preference, well, the way the portfolios have invested, it's majority male still, and a small female minority. When we talk circular economy, there hasn't really been intent to invest in circular economy. It's just it's like it just happens to land up in circular economy, or where that business has recently adopted circular principles and tried to kind of adopt it in their operations because it makes business sense. So, for example, there's a cane manufacturing business that's tried to introduce circularity into their operations and the way they manage waste and how they design out waste. But they didn't receive capital because they were a circular business. They received capital because the business was profitable and there was a kind of a clear growth opportunity with visible cash flow that kind of put the investor at ease on how they're going to get their returns back, right? So very much the same kind of lens being adopted and applied. There's no real kind of discount or special treatment for green or circular businesses at the moment.
Thanks very much, Grant. Sibusang, did you want to add anything? I'm conscious that we only have about 5 minutes left, and there's one last question from Chris that would be valuable for everyone.
Sure. I think I'll be just 2 seconds on what Grant has already said. I'll just say that mostly those that are attracting the bigger ticket sizes in terms of funding are those that have B2B models, simply because of how those businesses are structured. They have contracts, which means that there's more predictable cash flows that are coming into the business, and it might make it easier for investors to evaluate. But nonetheless, like Grant said, it does not necessarily discount those that are that have B2C business models. It's just that a different lens has to be applied to them, and making sure that the instrument works for them.
Thanks a lot, Sibusang, since you are on the spot, and I see that you responded to Chris's question. Just for the purpose of everyone, Chris asked how the global alignment of international funding currently aligns with ESG reporting, and transparent protocol through the ISSB. Sibusang, do you want to speak through your response to Chris?
Sure. So I think that there will be a shifting of capital as these standards become more aligned. And when you think about how the global financial architecture obviously is moving towards a just energy transition. For example, those that are still, I'm going to give an example, those that are still investing in perhaps fossil fuels are not going to be able to reinvest in those kinds of projects at rates that they were accustomed to. Those are going to be more expensive in the future. So when you change incentives, you're making opportunities for green finance to grow, because you're able to attract cheaper capital. And so what I'm essentially is saying is that those that adhere to those standards will be able to get cheaper and more capital.
Great. Thanks a lot, Sibusang. I think that we have all come to the end of our webinar, at the very least. From my perspective, from the ASTEM team, Crystal, Katerina, and Mare, I would just like to express my sincere thanks and gratitude for making time. I think the turnout was definitely higher than what we expected. And congratulations again to the CSA team on the launch of the website. Perhaps, is there any closing remarks from the speakers? Katerina, Crystal, Sibusang, Grant?
Yeah, maybe I can also say thank you to Fetola for joining us. And we are also currently working in the background to have additional financing webinar series, where we're looking at inviting other participants and stakeholders to better understand the circular economy financing landscape, because as alluded to, it's very, very nascent, it's very new topic. And we actually also see in the global north, it's still a massive challenge. So, and obviously our environment, it is a whole other level that we have to tackle. But super excited to looking forward to the next webinar series. And thanks again for everyone joining. And thanks again for obviously Gracia for moderating and Fetola for joining.
Thanks, everybody. It was good.
Thank you, everyone. Have a nice day further.
Thank you. Bye.
Thanks. Bye.
Bye-bye. Bye.
Bye.
Thank you.